Heidi ho, everyone, and welcome aboard. It is Thursday, and probably for me, the last trading day of 2000. Sorry, that would be February 2021. No, I'm actually going to trade beyond February, so my apologies for that. Because next week is a new week. In fact, next week is a new season. It will be spring in the Northern Hemisphere. It'll be autumn here in the Southern Hemisphere. Does that mean anything? I don't know. Sort it out yourselves. It means we're closer to May. That's what it means. G'day, Paul P. And everybody gets the kind of jitters around May time because of that infernal saying that says "sell in May and walk away." Wonder is that relevant in 2021? We'll find out, I guess. Righto, first up, of course, we'll do the breakout scenario. I got completely disinterested with that yesterday because I missed the entry, didn't I? I think that was the case. And I don't know what happened. We'll catch up with that a bit later in need. But today, we are once again going to trade the optimized version of this, which is the range of the last 5 bars, or the 5-bar range, 1, 2, 3, 4, 5, which is pretty much the same as 1, 2, 3. It will be again, except the entry and stop loss is a little bit different. In fact, it's very, very close to what we originally started with, which was back, SH1T. Can't remember now. It's over a year ago, I think, anyway. Let's set some parameters. I think we can set the long, and the long is going to be triggered at 1.4170. The stop loss at this point, and the sell, which will be this. Sorry, that's not true. I didn't allow for my 3 pips, did I? Let me make that clear once again. It'll be 1.4173 will be the entry for the long, and the stop loss, and therefore the entry for the short, will be 2 pips below the low of this bar, which is 1.41209 on my broker. I'll round that down to 1.4120 and then take 2 off it, so it'll be 1.4118. Okay, got it. 1.4173 is the entry for the long, and 1.4118 is the stop loss, and therefore the entry for the short. That's if it stays as it is, mind you. It's got another minute and a half to negotiate. We'll see if that's going to be the case. I'll put the numbers up here, and if they need to change, they'll change. So the sell will be 1.4118, and the stop loss will be 1.4173. Now, the take profits, there aren't any. On this strategy, it's the target. And the target today on the short will be, get rid of that, first support level, which has pretty much got to be there for mine. So we'll call that 1.4093. You could go to DS1 if you wanted. Not 100% sure how that's been optimized. I better ask Peter that. In fact, I'll do that when Ash is on. I'll Skype him and see if he can give me a definitive answer for that. But I'm going to use the more conservative level because that's me. I'm that sort of guy. 1.4093 is going to be TP1. The target for the short. I've got to get rid of that red. That red is really, really hard to read. And the target for the long, again, first resistance, I'll go with DR1 for the long, 1.4218, let's say. Okay, I'll put that in a bit later. First, we'll put the orders in the market. And again, if you're here for the first time, you guys are here always are going to get really sick of me saying this, but it's necessary to say it because I don't want to put people into trades that are not a proven system or a proven way to actually make money over time. That would not be fair. So if you're trading this, you need to trade this in micro lots, guys. Please do not put any serious money on this until we say it's an effective strategy or breakout strategy or system or whatever you want to call it. But at this point in time, it is not that. It is neither nor. Was I taught the right thing at school? There was a rhyme around that. Neither nor, neither or something. Either or, neither nor. These I go on sometimes, don't I? The buy, we've got all that. Sorry, we need to trade it. The buy order is the reverse of the short, and it is the buy stop. The entry level is 1.4173. And the stop loss is 1.4118. Now, I said this to Peter a few weeks ago. And I said, often we're going to be taking odds on here, or what I call odds on, which means if we're getting out at first resistance and we've got a big stop loss, oftentimes we're going to be taking 1 to 0.6 or 1 to 0.5 or 1 to 0.8. Sometimes will be 1 to 1.5, but I think that's probably going to be the best that you get. But the point is, it's not about the odds that you get. It's about, for this strategy anyway, it's about winning or losing. So if you're winning, 70+% of the time and you're getting 1 to 1, 1 to 0.8, 1 to 1.2. So if you average out at 1 to 1, you'd be pretty happy. And that's pretty much, I think, where the optimization gets us. I'm still willing to develop the way I would prefer to do it, which is to take profit and get safe. And then if we do get a breakout, after all, that's what it is. It's a breakout. And breakouts can sometimes be trends. They can go to trend and you can maybe get 4, 5, 10 to 1 sometimes, if you're super lucky. But there's got to be a way to combine these, and Peter and I are going to work on that, and we have committed to this because I think it's a pretty good way to go. If you just want something to do day in, day out, that is going to get you a little bit of cash and sometimes a lot of cash, then happy days. Obviously, sometimes you're going to lose, but that's trading, and we have to something up with which we must put, as one fearless and famous British Prime Minister once said. Okay, so that's the pound trade for today, and we're trading the optimized version. If you're trading the Jeff version, if you like, you'd be entering long at the top of that bar, and you'd have your stop loss underneath it. Wow, that brings in a potentially massive reward to risk, but the risk, of course, being that low, what 13 pips say, you'd be taking profit at 6, which is about here. Imagine if it went through the highs, you'd be laughing, you'd be really cheering. On the short side, you'd be entering below that bar, and your stop loss would be above it, and your TP1, that would be a risk of, say, 44 pips. So 22, be very, very close to where the target is, right? So I'd be happy with that. Trading my version, that would be TP1. You're safe in the market at that point. And if it does go, then happy days, you stand a chance of making some dough. Righto, updates. This morning, guys, I put you into 2 trades. Both the same, really. Aussie Kiwi. Now, Aussie Kiwi has hit the first take profit on the first order, which was this order here. Maybe I best explain the reasons why I took this trade. I think that's probably wise, because it's going to be completely confusing to some of you. And you've got to go to really the monthly chart to get into my head. And my head's going, okay, we've got a range here around about 130, is it? Sorry, 113. Yeah, 130. I wish. I'll be spending my life in New Zealand if that were the case. And 101-ish around here. So to me, that's the range. We're going from top to bottom to top to bottom to top to bottom to top. Oh, haven't hit the top. So that's my point. My point is we've got a base here and we've potentially got a higher low. This is on the monthly chart. Of course, anything can happen in here on a daily basis, or certainly an intraday basis. But if this is indeed the high, or sorry, if this is indeed the higher low, then over time we should make our way up here. So I thought I would take advantage, if you like, of the good news that the Kiwi had on Tuesday, I think it was, with their interest rate announcement and RBNZ statement, because obviously that drove this down. But I absolutely can't see anything that substantial in the RBNZ statement that would suggest that all of this was a nonsense. And of course, we had all of that before, based primarily on the pressure that was on the Aussie at the time. So I see this as a potential continuation of this trend. Now, obviously, from a technical point of view, you can say that we've now got a lower low, and that's absolutely true. But to my mind, that lower low was created by an emotive move on the back of that RBNZ statement. So therefore, I feel, and I was pretty confident that it would bounce, but where it bounces to, of course, is anybody's guess. Daily pivot would have to be the first port of call, one would think. And if it bounces off that, then okay, I totally get it. And if it goes short, I totally get that as well. But I don't see why it would. As I said, emotive move on the Kiwi news, and that's erased all of this. I don't think it can. Actually, just for fun, I'm going to pull a fib on that. And I never do this, but I thought it might just make sense. 50% retracement, bang. So that makes sense. So if I'm right, this could, in fact, if I'm right, this will take out the highs and it'll continue on and test up here, I would imagine. If I'm wrong, then the object of the exercise is to make that as cost-free as possible. And that's why we've taken two positions. Our first one is through take profit 1, and we've got our stops in a safe place. The second one has been triggered and is pretty much bang on entry. I'm relying now. And if we do hit the daily pivot, I'm inclined to just take the first trade out, so cash in, and that would make the risk on the second trade almost zero, which is, of course, makes me smile. That's exactly what I'm trying to do. So if we hit TP1 here today, I'll be closing the first position. And as I say, that should put us in a pretty good position to take advantage of anything that happens thereafter. If we were to get above the pivots and come back and retest them, then obviously we can scale into that as well. So all things considered, I'm in a reasonably smiley place on Aussie Kiwi. We've got to hit the daily pivot though. And if that happens, we'll be even better. Ash is looking intently at this chart. G'day, buddy.
Hi, mate. Yeah, I am actually. The FTSE is, I think, a buy for the day. I'm just having a look to see. I'll show you my chart here. I'm just having a look to see where there could be a possible opportunity. It might buy from here, but there is a pivot below it. So let me show you this. The pound continues to motor. I have to say I've been caught completely off guard by the pound and the upside in the pound. Did have a little bit of a struggle yesterday. I noticed against the Aussie eventually,
Did you stay in that trade, or did you get into
No,
that trade?
I did get in. I did get in. I got stopped out. It was quite vicious, wasn't it? Before it eventually went down.
Yeah, well,
So
as you know, I was looking for a way to join you, but gee whiz, it was tough to find one. And certainly
yeah,
when I'm in front of there's one there, I suppose that would have been nice, as would that one, both of them.
yes, yeah. To be honest, I was doing it a few days before, so I eventually took my eyes off it, which ended up being a mistake. But it's one of those things, isn't it? You have a bias, and you look for that bias to meet timing, and
Still
sometimes when
all
that
about
timing,
timing, isn't it? Yep.
yeah, because when that timing kind of is off, then I suppose it's kind of human nature that you start then questioning your bias, um, which is really what happened for me with the Oz. And I'll show you actually. I'll show you in a moment what I was talking about with that. This is the FTSE. So the FTSE, it could buy here. It's got a little bit of support on the 15-minute chart. Now, if we look at this on the hourly, then we can see that actually this is not a bad place to go long. But the weekly pivot just being down here, it may come down there. I'm not so sure it will. If we look a little trend line here, there's another little surge to the upside. I think it probably is going to touch this upper trend line on the daily before we start to get any further signals of downside. Jerome Powell has calmed things down yet again, and certainly when it comes down to inflation expectations, he's calmed things down again. So the markets have really got a green light to go. This head and shoulders pattern is bothering me. And maybe this is going to be another situation where we kind of think about the bias. I've got a bias long on gold, and I've taken some positions on gold, but it can't really. It's struggling to kind of catch a wave. But it's one of those things that I'm quite happy to build into gold pretty slowly and see what happens. I'm building small positions in gold.
I listened to a debate on gold today.
Yeah.
Between, I don't know if you've heard of them, a guy called, I think his name's Harry Dent, maybe.
Okay. Sounds like he wasn't he a character in Batman? I think he ended up being Two-Face.
He could well have been.
Oh, that was Harvey Dent. But yeah.
I've got no idea. You're one step ahead of me. And Jim Rickards. You might have heard of Jim Rickards.
No, I haven't, mate. No.
Yeah, both controversial people. One's a conspiracy theorist, which is Jim Rickards, and the other is just an out-and-out screamer. He just screams, man. He's so passionate about what he thinks.
Right. Yeah.
I think that's on YouTube. I'll send you a link if I can find it. One saying gold's going to 1,000. And this is what Ainsley was saying yesterday.
Yeah, yeah.
And the other one's saying gold's going to 10,000 conservatively.
Yeah.
So if they're both experts in their field, and this is, I think, was at Ainsley's point yesterday, what on earth do we punters as absolute novices, well, certainly me, and I won't even go there, but if you're not on top of that, and even if you are on top of that, they're poles apart. One saying we're going to hit deflation, the other one saying we're going to hit inflation.
Exactly, and that's the key, isn't it? And I suppose it depends on which side of the camp you sit on. I mean, I've heard the same thing. So I had to listen to the Bank of England statement yesterday. And a question was put to them about inflation, and effectively saying that there is a fifth of economists, reputable economists, are saying that there is a concern about inflation, and what would they do about it, the guy answering, I can't remember, it was Haldane. He effectively said, "Well, that makes 4/5 that I'm talking about it." So, you're kind of skewing the argument in favor of really, what your bias is. And the woman quite openly said, "Yeah, I am concerned about inflation, and it is a bias, and I suppose it's one of those things you end up reading and believing the one that confirms what you think." The Bank of England, certainly, if we are to trust them, they believe that they've got a handle on this. They're not concerned right now about inflation. The the maths, not really knowing all of them, and this is the difficulty, isn't it? Because we're not really party to all the figures, or maybe we are, but we don't necessarily know exactly which ones to input to come up with the final figure. But just on the surface of it, the money printing and the stimulus that's going on, that it does suggest that the fiat currencies become devalued, and if they become devalued, and the kind of the next thing is that they can't buy as much for the money, so you would get inflation, and that's what I'm kind of focusing on, and also I quite like gold, but as I said yesterday, I quite like it because it's getting beaten up. It's kind of unloved here, and silver's completely different. Silver is pretty popular at this stage. And there's a ratio, and I was talking to I can't remember if it was Paul about this ratio before, but if we look at gold and silver, FTSE, as I say, FTSE's a tricky one. I think the FTSE, it's got upside. It's just where you get in, and I'm not sure. I would prefer to wait for this weekly pivot because it's a better price, of course. But this feels like it's a little bit suspended in thin air at this stage. So I'm not going to get into the FTSE. Let's talk about gold and silver and come back to the pound Aussie and talk about bias in a moment. But this is where is gold? Here we go. So here we go. So gold is at 70.90, and it looks under pressure. It continues to look under pressure. Let me change this to a clean chart so we can look at longer term time frames without the pivots messing things up. This is looking weak. There's no two ways about that. Maybe there's a trend line there which brings this down quite significantly. 1500, maybe it comes down to 1500. Could be the trend line around about there, which doesn't have quite as far to run, but it still brings it down to around about the 1670 mark. So another $100 dip. Now we compare this to silver. And silver's going in completely opposite direction. It's better actually to look at this on possibly weeklies. Let's have a look on the weekly. Yeah, maybe even on the daily might be better. Let's have a look on the daily, and you can see that silver's grinding its way up. Kind of back to this point here, and it could be down to the Reddit crowd. It probably is, and gold is grinding its way down. So they are separating. There's a parting of the ways with gold and silver. Now, of course, silver has got a slightly more use than gold. I mean, gold is used for certain components, but it's more of a store of a protection store. Now,
interesting point, mate. Sorry, and I hate to interrupt, but the further they get apart,
yeah,
the more likely they are to come back together, isn't it?
That's exactly the point. And there is a ratio that I use. So if I'm, let me just bring this up. Calculator.
I've just put a link in the chat, guys. I think that is to that debate that I watched today. Very, very interesting on a number of topics. And Simon, don't watch it. Don't watch it, Simon.
To do with cryptos, is it?
It's got a fair bit.
Well, yeah, it's a problem, isn't it? And it is a problem when you start to watch things and it changes your bias, because you just don't want that to happen. I think if you have to research that, you've got to kind of like go and farm information to make decisions, but it can become difficult. But I think Simon's pretty good now. He understands what's noise and he understands what's.
I'm pretty sure he does. Yes.
On the whole, I mean, to be fair, I mean, we're all in that situation where sometimes you don't. If there's somebody new and they make a compelling case, it's difficult to know what the noise is. There's a guy that I follow who did a whole history about gold and how gold will be the kind of the reserve currency and what happens to fiat currencies. And he's brilliant, and he's made an amazing little YouTube series on gold, and it does make you want to go out and buy it. But then you kind of dig a bit deeper and you recognize that he's a gold trader. Mm-hmm. He sells gold and silver. So it's kind of in his interest to kind of like keep people, sparked up on things like gold. So you need more than one source of information. I think when you need both sides of the argument, don't you? Really, and maybe watching something like this is a great way to do it if you've got two sides of the argument, because you can see which one speaks to you. And which makes the most compelling argument. But let me just bring this ratio. So gold is currently at 1790, let's call it. Silver's at 2775. So if we bring this in and we put in 1790 and divide that by the 2770, 75, what we get is a 60-foot, the ratio of 64. Now, if the gold silver ratio gets 80 and north, then it means that gold is undervalued in comparison to silver. And if it goes 50%, then it means that silver's undervalued against gold. So we're kind of in the middle still. You know, it's quite a wide range, and I would say when it starts to pop up to 70, then you know the gold ratio is getting a bit squeezed at that particular point. So you know, over 70, gold's getting a bit squeezed. Under 60, silver's getting a bit squeezed. So we're sort of in the middle. We're kind of right bang on, I guess, where we sort of should be. But if silver does continue to value and you know, to go up in price, and gold either stops or goes down in price, then gold does become even more attractive as a potential buying opportunity. Because as you say, mate, that you know that there's almost a reversion to the mean, and the way to trade that, it's probably better with the physical stuff, but you can do it on MT4. The way to trade it is to buy both. In a scenario like this, you try and buy both. Now, if silver starts to rocket to the upside and gold moves to the downside, you start to sell some of the silver positions and buy gold with those positions. So you effectively give yourself, let's say, $1,000 to do this trade. And that $1,000 just rotates a little bit like actually what Simon and Shukri and the guys are doing with the altcoins with the majors. So when the majors kind of get out of kilt with the altcoins, then you trade your altcoins you trade your majors for the alts, and when the reverse happens, you trade back your alts for your majors. And it's similar, as I say, it's very similar. So it's well worth watching the gold silver ratio to see whether they are, moving far, that far away from each other, and keep watching, whether they do sort of like start to bump over the 70 to 75 to 80, or under the 60 to 55 to 50 level. And then you can start looking at the charts and sort of, seeing whether there's an opportunity to switch out positions, because they should, as I say, they should sort of sit between this region, the kind of 60 to kind of 80 level is the kind of region it kind of gets in. But like you were saying about the Aussie, when it gets closer to 110, then you're looking to sell it off, and when it gets down, against the Kiwi, So, and you could do the same thing. Actually, you could probably do the same thing with the dollar and the CAD as well. There are probably ways to play the dollar CAD as well. I mean, you probably want to start accumulating Canadian dollars. Well, maybe at this stage it might be worth looking the other way, but there will be a ratio, no doubt, between the dollar CAD, just like you were talking about with the Kiwi, the Aussie Kiwi, and I think that they're all over the place.
Yeah, currencies are so much like that.
Yeah,
there's a perceived value, and
yes,
they rarely go outside of that.
They can't, can they? I mean, in a way, they it's irresponsible for central banks and governments to allow that to happen, and the reason for that is that they can't trade any. That they're not competitive anymore. I find the pound fascinating, because the pound, in a way, is going to get close to being out of kilt. I was reading something yesterday as well, and this is something else that the Bank of England were talking about yesterday, and that is the competition that has just and we've been talking about Brexit for the last 5 years, and how it's kind of like moved the pound around. But what's interesting now is that Brexit hasn't gone away; it's just changed its form. Okay, it might be more gentle. What's about to happen might be more gentle, but now the UK and the EU are in direct competition with each other. And there's already a kind of grab for parts of the UK's financial industry, and some of them have migrated over to Holland. And of course, the way they can do that is by making sure it becomes very, very difficult to do trade within the region. So if you want to do trade in the EU, it's not as easy as it was when the UK was part of the EU. So the EU are effectively saying to some of these companies, well, you've got two choices. You either go through the red tape, or you open up a part of your business in our block instead. And the UK government have said really for quite some time, or many parts of the UK government have said for quite some time, that they won't become a Singapore-style economy on the edge of Europe. But things change. Things change very, very quickly, and maybe that will happen. Maybe eventually the UK becomes fed up with the EU trying to make a power grab for its industries, and says, right, okay, well we'll completely change the nature of the game. Because the question last week, I think it was by Jura, who comes out, or maybe Lewis, who comes out of this better, out of the UK and the EU? I suspect it will be the UK. And the reason that I think it will probably be the UK is because I think the UK has got more opportunity to change the way that it does business and to change its economy. The EU is going to struggle to
well, by definition, it only has to please itself, doesn't it?
Yes, exactly. And the more deals that the UK manages to do worldwide, in the likes of Japan and the States and Australia, of course, and maybe China, the less it will be reliant on the EU for its economy and for its GDP growth. So yeah, I'm finding this whole thing quite interesting now, mate. What's going to happen next? And the reason I mention it is that I don't think it's going to take much to topple the pound off its rally, because we've had a crazy run, really. Just going through these pound pairs. I mean, look at it today against the Aussie. Yeah, sorry, I was going to talk about
the euro and the Aussie against the dollar at the moment. They're flying.
Yeah,
and the pound is not.
Right. Yeah. So, but this is the thing about bias. I was really short on the pound. I was quite happy to go short on the pound Aussie. But this was my level. I think it was around here. I can't remember exactly when I started to get into this.
I said I was going to join you, but no opportunity.
Yeah, it was difficult, and the only way I could have got away with that is having a stop all the way up here. And you're not even at break even yet. You're not even at 1-to-1. This becomes obvious now. I think it might have even been a little bit further in the picture that I was long the pound. Yeah, I think I might have been short around these levels here. But again, it pops to the upside. So trying to get an intraday trade round here was very, very difficult, because it just kept wildly moving. This was the obvious place. I mean, there's a lovely little level there that could have been taken. But this was my issue. So when I looked at the pound Aussie, I was looking at this and I was going, okay, well, the primary trend is to the downside. Looks pretty good. Nice little breakdown of a trend line along here, probably. So liking the downside there. Looking at the weekly, that was also looking to be under pressure. But it was it wasn't. Yeah, it was. Maybe it was in this area I was doing it. It was a few days ago, wasn't it? I was doing it. So when it was coming down here, I think that was my issue when it started to break down. But this one, yeah, this one, this bar here, 2 days ago, I think was a good signal, because that is really what we were talking about before, about going for the green bar and trying to sell it off the green bar. But that was a good signal, because it hadn't really got anywhere. This is a failed morning star. The price comes down, we get a little bar down here, the bar up doesn't go anywhere. And yesterday, it really was signaling the opportunity. But again, mate, how you get into a move like this is tricky.
Well, you've got to be there when it hits the trade line or the trend line, haven't you?
Exactly.
You've simply got to be in front of the charts.
Exactly. And
if you're not, you're not.
And what's the signal here? This hourly bar pops above it. This hourly bar rests on it. the next hourly bar maybe gives a signal, and then maybe this is the one here. Is it tests the area and refuses and rejects it? So maybe an entry under that bar would be favorable. Would that be the way you'd want to play that?
No, the high test bar,
Yeah.
which is the green bar down about 5 bars from where you are.
Yeah.
No,
Yeah.
on the other side.
Yeah.
That bar there.
Yeah.
That would be the one I'd like to trade, because it's coming off the top, coming off the bounce, and it's giving you a lower high.
Yeah, nice 3-to-1 there as well. Let's have a look at what that it means with the pivots. Yeah, coming off a weekly pivot as well.
Yeah, they're the ones I like to trade. Yep.
Yeah.
Probably even better than the one before, but the one before is kind of, you want to get in there for FOMO, but if you're patient enough and you get that test of the level, that's just yummy.
Difficult, very difficult. As I say, mate, you know, nice trend line rejection there as well. There was quite a lot to like about it. It would have been a lot to like about that, but you know what? It's one of those, isn't it, that you, look at that as well. 38% retracement on the fib rejection. It's one of those scenarios where after the event, it's so easy to find the setup.
Of course.
But during it's difficult, and you know, as I say, my bias was to the downside, but most of the setups that I was trading, I may have traded this one. I can't even remember which ones I took now, but I may have traded this one, which almost a 3-to-1, but sorry, almost a 1-to-1, but then it pops to the upside and takes us out. And the only thing you can do in a scenario like this is be absolutely on your metal with your bias, because you know you'll continue to look for downside, but you know, it's a fine balance, isn't it? Because at some point you kind of go, why should I be right? You know, maybe I'm wrong about this. It keeps popping back up again. It doesn't seem to want to go down. Maybe I'm wrong, but inevitably it's the timing. It's just a timing thing, and difficult. You would have gone into this probably 2 or 3 times before you're making the money, and okay, now it would be on its way, but I'm just not too sure about it now. When it comes,
it's also, you know, what chart do you want? Weekly? Daily?
This is the hourly.
Hourly? Oh, jeez. Yeah. Okay.
Just for the entry.
Again, you've got 3 phases there. 1, 2, 3.
There's the weekly.
If you live by that third phase, you know, you make your money in the second phase. But if you live by that third phase, and you have made your money in the second phase, that's the cream on the top, that third phase, if you get it. You know, it doesn't always happen, but the second phase is the one where you make the money.
Yes.
But that third phase is absolute cream. And gee, you know, if you can get a signal to trade that would be, you know, if there's a takeaway from today that I can give you guys, watch for that third phase. But you probably got to have made your money in the second phase.
Yes.
You don't want to pick it up on the third phase most often, because that's going to be the risky one. There's 2 risky ones. The first phase and the third phase, they're risky. The second phase is the one you want to be in.
Yes. Morning, Si. How you doing, buddy?
The cream.
Yes, I agree, mate. And really, the third phase is where you want to, even if you've got your second, you'd want to be adding here, wouldn't you?
Absolutely.
You know, the pound yen is the other one. You know, and this is what I'm looking at with a pound right now. I'm looking at a pound Aussie, which is weak. I'm looking at a pound CAD, which is weak. You know, if we bring this to the daily charts here, look at that pound CAD. Really nice signal on the pound CAD. Pound Swissy, okay, not anything to write home about, but it's a little bit under pressure here. Pound Kiwi, definitely weak. And this is another one you were talking about yesterday. Pound Kiwi, definitely weak. So, you know, and you just mentioned the pound dollar as well. Under pressure. Yesterday's bar, under pressure. I think the pound against the dollar is still tradable. I think the pound against the yen is still tradable. How you get into this, I don't know. I've been run over a few times with the pound yen, but I think the pound yen is still tradable. This is an expansive move to the upside. Now it can continue, but just as we were saying with Bitcoin the other day, it's unlikely that these things just continue to motor forward, and maybe we're waiting until next month. You know, it's a genuine kind of thing that happens in the market where people take the phase and they look through, they look to sell it off after a new time frame has opened up. And maybe we're looking to sell this one off next month, and maybe before we sell it off, it gets all the way up to 154. So it might have another 400 pips to the upside before this this starts to roll over. But I think it will. I mean, you know, we haven't had a test of this. We're talking about phases, and I suppose this would be phase one. There's phase two, and we are, you know, currently in this kind of phase two. But you'd expect some kind of pullback to get on board. Now, I'm not saying the pound isn't going higher ultimately, but at this stage, it's pretty unrelenting. We've got a budget coming up next week as well, and I wonder whether that might have some kind of say in this. You know, not too sure, but yeah, it's a tricky one, mate. But I still like it. You know, I think if you're looking at the pound, if it's weak against these other ones, it might be just providing a signal to look for the next opportunity. And it's a bit like whenever I trade stocks, if I'm looking at something which is, let's say, oil is going to the upside, there will be something in that supply chain that hasn't yet moved. And you can look down the supply chain and go, okay, well, oil's gone to the upside. Let's say the mining oil miners have gone to the upside. But hold on a minute, some of these drillers, some of the guys that maybe own the rigs, maybe the guys that own the rigs, maybe they haven't enjoyed the move yet. And you can go down the supply chain and see if you can jump on board. And I'm looking at the same with this pound yen, and I'm still wondering whether there might be a little bit of downside with this. It's currently at 150, which again it's a round number. So there's quite a lot to like about this level, but it needs to show some signs of reversal before we jump on board. FTSE is moving. Yeah, go on, mate.
Sorry, Matt. I was going to say, have a look at the pound versus the dollar on the monthly chart. This could be the start of a massive reversal.
Yes, it could.
Go a bit wider, and you'll see the big double bottom that's formed. Well, you can probably see I've got things covering that at the moment. Yeah, look at that.
Yeah.
If it gets through that level, man.
Yeah, which it will at some point, won't it? But you'd still be looking at this to come back and at least test down here. I mean, technically speaking, this looks like a great place for a short.
Yes.
It looks like a really good place for a short. I don't know whether it's the same.
But you'd be probably looking for a long when it gets to that support.
You would. Yes, you would. Yeah, you absolutely would be looking for a long. I'm just seeing whether the pound. Yeah. The other thing with the pound is that it tends to be a bit weaker at this particular time of year as well. So, and we've discussed it before about the argument with seasonality. Are things getting out of kilt with seasonality? What's going on here? And maybe they are.
Well, I said that when COVID began, right? I didn't think that seasonality would be very reliable through COVID, but when we came out of it, and I kind of reversed that coming into the new year. So far, the new year hasn't really produced anything spectacular, but the signs are there. You know, it's promising because the COVID has been, the vaccine. If you listen to that link that I have posted in there, and Simon, I don't know if you heard me when you were on the phone. Don't watch that, mate. It's not up your alley. But if you listen, because Jim Rickards is a conspiracy theorist, right? And if you listen to what he says about COVID-19 vaccine, you'll kind of reverse the optimism that you've got in the market or anything at the moment.
Yeah, well, do you know, mate, I think that's quite interesting, isn't it? Because all we've had so far, and we know how this stuff works, it's everybody's talking good news, good news, good news, while the market is going in a certain direction. When it's going in a different direction, everybody's talking bad news, bad news, bad news. And I find the COVID thing still too early to call. yes, we've kind of got this vaccine, and things are going really, very, very well, and Boris Johnson certainly over in this country is opening things up, and everything's going dandy. But it's just it appears to me that it's too early to call whether this thing is genuinely over. I think the desire that this thing's done is so great and so huge that it's a confirmation bias, isn't it? You will ultimately go, well, the vaccine works, and I mean, the numbers are suggesting it has worked, and it is working. But we still don't know whether this thing is completely done with, or not. Yeah, it feels a bit too everybody's a bit too keen, in my opinion, to kind of jump back on board and say that we are done. Is that COVID-19 is now behind us.
And you can understand why, because
Yeah.
it's been a fairly depressing last 12
Yes.
months.
Yes, it
So
has.
you'll grab hold of anything, won't you?
Yeah, but on the flip side of that is that conspiracy theories and conspiracists, they make me laugh because they always sort of say, uh, why are you following the sheep? And then you kind of realize that they're following conspiracy theorists. So it's like you don't really know.
I'm not a conspiracy theorist, but gee, I listen to everything they say.
Yeah, yeah, exactly, exactly. Yeah, don't be a sheep. Listen to all these conspiracy theories as well. It's yeah.
Mm.
But I don't know. It does make the world difficult to call, and I suppose you kind of and this is again back to numbers. You kind of ultimately you have to rely on the numbers, and this is the big question about inflation. And it's not whether we're going to get inflation. That doesn't seem to be the question that is being posed to a lot of these central bankers. The question is, can they control it? Because if inflation gets out of control, then of course something like gold is going to move to the upside, and silver and oil and everything else. It's a question of whether they can control that inflation. Now, the thing that concerns me is that they don't seem to be adding too much meat to the bone. They just keep saying, we've got the tools. Well, what are they? What are the tools that you're going to use? They haven't really set out, as far as I'm aware, they haven't really set out exactly the route to calm inflation, and it's always manifest in the markets. The market will just pop up because of speculation, and it hasn't really got any grounding or any foundation on why it's moving, and from what I can read at the minute, money printing and low interest rates with nowhere to go would suggest to me that inflation is on its way. Now, maybe I'm wrong. Maybe that's the maybe it's going to be
Well,
just something that
inflation has to be driven by employment, doesn't it? As I see
right,
it,
right,
because the more
and
people who are employed, and the more people are in the workforce, then you've got a situation where everything's bubbling along fine. But if you and here's an interesting point, and it came out of that discussion that I put that link into. We're running out of workforce because of aging population, baby boomers, etc., right? Who are all
yeah,
retiring, going out of the workforce, blah 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 blah. Who is it, China or Japan, who have had a one baby policy for the last 20, 30 years, or whatever the case may be? So potentially that workforce is declining as well, which would tend to give you a situation where, okay, we've got less workers, more jobs, or have we got more jobs because computers are going to rule the world, et cetera, et cetera? How do you work that out? If we've got less
well,
people to fill more jobs, or have we got less people to fill less jobs?
I think
How
that's
does
an
that work?
interesting one, mate. So with this, as we get back to work, there will be a glut of working supply, because there are a lot of people that don't have jobs right now. There's been a cut down of hours, of man hours in many companies. Many people were furloughed, so there is a lot of people waiting on the sidelines to come back into the jobs.
There are,
Now,
but that's been boosted by a lot of business owners. For instance, if you owned a coffee shop on the high street or whatever
yeah,
the case may be, and there'd be shit tons of those
yeah,
because there were who haven't been able to operate for the last 12 months
yes, yeah.
effectively. Half of them are gone because they couldn't afford to stay. The other half have got to come back with a bang, I suppose. So are they
Yeah.
going to be enough to employ those who have lost their job? I don't know. It's a complete mess.
Well, yeah, I mean, that particular isolated situation is an interesting one because the economy will change from here on in. There are already sort of like people saying that they won't be going into work as much, so coffee shops are going to be under a lot of pressure. So straight away there will be a
That
lack
as
of
well.
jobs. Yeah,
Yep.
but what I thought one of the really interesting things that the Bank of England did say yesterday is that we have to look at now one of the other metrics that we use when we're looking at whether an economy can afford for the consumer price index to be popping to the upside, so the inflation to be popping to the upside, is with average earnings. And the Bank of England made a really, really interesting point, and I would say that this is probably the case the world over, and this is something to really think on and mull over. When the companies shaved away its workforce during the pandemic, they shaved away most of the people, percentage of the percentage of most of the workers were at the bottom end of the workforce, which meant that they were shaving away the workers that were earning the least, and that meant that proportionally you were left with people that were earning more money and there was less people in the company. So when we're looking at an average earnings number, the average earnings ratio, there's more to it than just going, okay, well, average earnings are going up, so the economy is going to be doing fine, so it can afford for inflation to start to increase. Well, that doesn't appear to be the case. According to the Bank of England, actually, there's a big concern about that because the people at the lower end will be pushed out of the market. The house price index is another one. Over here, we've got house prices on a bit of a boom because of
Same everywhere, mate. Same all
yeah.
over the
But
world.
did you have a stamp duty holiday, or if you have that in there over there?
I think for new homeowners, maybe, but that's always been the case. There's always been relief for new homeowners of some
Well,
description. But no, I don't think.
we might be getting another one. We might be getting another stamp duty holiday over the next 3 months. And if this means that people are out there buying, some of those people with mortgages at an incredibly low rate, some of those people are going to get caught out. They're going to get caught out with inflated price. That they want to get on the property ladder, so they buy a property. The price of the property is going up. Yeah, that's all well and good, but eventually it levels off. But it's no different to
Yeah.
what's going on with governments and lending. Lending will become more
My first
expensive.
house, I remember it so well. I paid 18.1% interest.
Wow.
For about 2-3 years. Yeah,
That
absolutely.
is astonishing, mate. I mean,
it wasn't good.
Yeah,
but, I mean, I had good job and all the rest of it. So during the war, piss off, Simon.
Yeah, yeah, but it's it appears to me like that there's a breakable system, a very easily breakable system. Now, I don't know what happens after that. I don't know. Do people rush to gold? Do they rush to silver? Do they rush to Bitcoin? Do they rush to Ethereum? Do they rush to a completely different source of currency? I just don't know. But we've been talking about it for a while, and what I don't want to do is get distracted by what's been happening to the markets over the last 6 months by sort of saying things are fine, because these things tend to take a while to turn, and we just don't know if they're turning or not. It seems to me like they are, which is why I am still quite happy to say I'm a buyer of gold. Now, don't get me wrong, I'll be buying other things at the same time, other things that could enjoy an expansion. But I will. But I'm tucking away gold all the time in the portfolio as an insurance mechanism.
Yeah, look,
just in case.
gold has what, doubled in the last 6-7 years or something?
Yeah,
Maybe 10.
probably.
Doubled in value. I see that
Yeah, that's gold.
as a pretty good precursor, right? Because
Yeah.
the more uncertain the world becomes, then I totally agree with you. You've got to hold some of that,
Yeah.
whether it's physical or whether you're in the market, whatever. And it could come down to, I don't know, it could retrace the entire way.
Yeah.
But at some stage, you are going to see gold. Whether there'll be a gold standard or otherwise, who knows? But it's not going to go away. It really is not going. And things come and go. Gold. If you had a parcel of gold sitting in your cupboard, there'll be things come and go, like I don't know, the US dollar, the Japanese yen, or whatever the case may be.
The Deutschmark.
Yeah, at the end of the day, your gold's still sitting there.
Yeah.
And it's still going to go. And whatever happens to the US dollar, whatever happens to the yen, whatever happens to the Deutschmark, the gold is still going to be there.
Yeah.
And it hasn't changed. The other things have changed around it, but it hasn't changed at all, not one little bit.
So I'm just having a quick look at the okay, I can't see. Now, I can't remember exactly how many fiat currencies there has been, but there has been thousands of fiat currencies. And, I think over the course of maybe 200 years, if there's been thousands of fiat currencies, do you know how many have lasted 200 years?
Maybe 2.
None.
Zero.
Not one.
There you go.
Zero fiat currencies have lasted, a 200-year period. And I think, and gold, as you said, mate, it's been there for time. It's been there forever as a form of payment, which suggests it's not, as you say, mate, it's not going anywhere. I still concur with the cryptocurrency space, but even cryptocurrencies might not last forever.
Well, you've just said it. I mean, you just proved it, right? It doesn't matter. Well, sorry, proved is a bad word. There will be new things come along, but I don't see anything anytime soon that's going to go for, what do you say, 200 years?
Yeah. Hi, Lewis. And you could literally go back to every single thing, and I suppose it's one of those things that I guess that the reason that the fiat currencies the reason that fiat currencies don't last forever is that dynasties change, and no dynasty still exists. It wasn't America when records started. We've been through so many different dynasties and so many different global powers that who knows when the United States status as the leading power ends. Because if you think about it, mate, really the United States has only been the leading power it's been the leading power for less than 100 years. It's only after the war. After the Second World War, or during that kind of time, during the Second World War, because we've had obviously right back to Roman times. We've had the Ming Dynasty and all that kind of thing, going right the way through. We've had the British Empire. We've had Germany kind of as the leading global power. We've had Japan was up there at one point, and we've had the States. But the only reason that the States really got there was because they owned most of the gold. And we're right back to it as well. Who owns the gold is tends to be the ones that kind of come out on top. And the United States owned most of the gold because people were buying weapons from them in gold, and they were also shipping a lot of the gold over to the United States because it was a safer place for it to be. They sort of like they're going to ransack some of the German gold, and they'll shove it over to America. It's nice and safe over there. So America basically held all the gold, or most of it anyway, after the Second World War. But obviously, they kind of they were irresponsible, and rather than sticking to using gold to back the dollar. They started to print money that wasn't backed by gold, and then we get this kind of this situation where everybody goes, okay, well, let's use the dollar then as the reserve currency, and it's completely unpegged now. But eventually,
and unplugged as well,
and unplugged, yeah, and eventually, yeah, exactly. But eventually, it all falls back into line. You would think, if we kind of go on that on that kind of factor, it's hold on, I'll have a look at this. Yeah, it will go back to gold at some point. I don't know whether it will even be in our lifetime, mate, but historically, it does tend to it has tend to have happened.
We're certainly in an era of change, and we keep talking about it. It's going to happen in not 10 years, not 5 years. We're undergoing change right now, and what that looks like, I really still don't know. But it could be gold, it could be, and I dismiss and always have dismissed Bitcoin. I believe in blockchain. I think that works for me because it's something you can grab a hold of. But it could be any bloody thing. Lewis, if you didn't, I was about to praise you for that beautiful trade on pound Kiwi back to the monthly pivot. You're going to tell me you didn't take it? I thought you were already in it. But by the kick myself in the A, it looks like you weren't. It happens.
Yeah. I thought it'd be a tricky week this week. I said that on Monday, didn't I? Didn't really like anything this week. I still wanted that.
It's not what I've got this week. It's what I've missed this week. And
oh, really?
Back to what we started. It's all timing. Apart from Euro Yen, I'll show you that in a minute. But yeah, a little bit disappointing. I mean, I'm going fine because Euro CAD missed TP1 by 5 pips. Dollar CAD's going nuts. Aussie's still going nuts. Aussie Kiwi's dodgy. I'm going okay.
Okay. Sorry, I'm just here reading something here, mate. This is probably a better statement. It says the history of fiat money, to put it kindly, has been one of failure. In fact, every fiat currency since the Romans first began the practice in the 1st century has ended in devaluation and eventual collapse of not only the currency, but of the economy that housed the fiat currency as well. Why would it be different here in the US? That's just what somebody's saying. So it doesn't bode well. It doesn't bode well. It's just whether we live through it, mate. That's the thing. So anyway, that's my case to be made for buying gold.
Oh, Lewis, you disappoint me. What do we always say? Listen to what people say, but don't make it change your mind.
Where are you seeing this chat? Are you seeing this in chat?
Yeah.
Are you? I've only got the last one I got is Lewis saying hi, Ash and Jeff.
No, there's another one under that.
Is there?
Yeah.
Okay.
Because he listened to what I was saying, and look, I really appreciate the fact that you do listen to it, but yeah, no, you please don't change your mind on it. That's a bad thing to do.
Angel can't see it either.
Oh, okay.
Nor can Simon.
It was to me. That's why.
Oh, it's to you. Oh, okay. Fine. Okay.
He was trying to save me.
Oh, fine.
Thank you, Lewis. I appreciate the thought, but yeah, it's an open book here, buddy.
Yeah, but by all means, put it privately. But I like to know what's going on. I love a bit of gossip. Nothing like that. A bit of gossip.
Absolutely. So, what I owe you a beer then, Lewis? Let's hope we can share one at some stage. That'd be good.
I'm sure you can, mate. Sure you can.
We got any trades, mate? Before we call it quits or not?
No. Do you know? I was just looking at the FTSE looks interesting, but I do think it's a bit difficult. I'm just waiting on things to come back now. I think the FTSE certainly could. I mean, yesterday's bar doesn't really bode well, does it? But last week's bar doesn't bode well. But the FTSE does look interesting. I still think that there's a grab for that upper trend line. Doesn't appear to be any reason not to buy this up. But I think it has been interesting is that Jerome Powell continues to talk the market up, and yet we're not quite seeing the same velocity that we were before, which is maybe a little bit worrying. You know, but there doesn't seem to be quite the confidence out there that there was previously. Yeah, it looks like it might come down to this weekly pivot, mate. And at that point, you would suspect, oh no, you know what? That's not tradable now. That's not tradable, even if that was to come down. Too much in the way to trade that to the downside. There's probably you know, enough movement to the upside. No, too messy here, mate. Too messy to trade it. Wouldn't even bother trying. It's the pound yen I'm still interested in, but this is just. I think one of the things about the pound yen which I find really interesting is that at some point this is going to start looking quite exhaustive. Maybe the pound yen is the wrong one. You know, maybe it is the pound dollar. I've got a bit of a problem with the dollar. Is the reason I'm not looking at that one very much. But look at that. Yes, on this week on the euro as well. You know, maybe this would be a better option. That the yen looks like a bit of a dog at the minute. But I wonder what happens by the end of today with this euro pound. Again, this looks to me like it might be getting a little bit exhaustive. Is we've had a lot of red without any retest really. With the pound, and yes, you know, this move down here is on, but without any retracement, I don't know, mate. I don't know. I've got my suspicions at the minute with the pound.
Yeah, it was lagging everything else at the moment against the dollar, and that's kind of where I get my judgment from. But it's just starting right now to raise its head again. It's a tough one. Really is.
Yeah. Just looking at these as well. If we look at the barometers of the FTSE, you know, you look at price, and now I'm going to bring up the ones with the biggest market cap here, and Unilever down a little bit. BHP is up. These are all sort of doing fairly well. AstraZeneca continues to drop. HSBC doing okay. BP now doing well. That's one of the shares I've been tipping for a little while, and that's started to stretch its legs, which is great. But you go down to the top 12. I think you could look at this on the whole and say that looks okay. This is not indicative of a market breaking down. So the FTSE coming to the downside right now at this stage is looking like a buying opportunity. You know, that's what I'm looking at.
That's you?
That's me, mate. That's me.
All right. Last things first. And I won't take long here, guys, either. Have you got to go, mate?
Oh gosh, I do actually. Yeah. WTI. Yeah, another interesting one, isn't it? Just not coming back. Yeah, it will eventually. Nothing continues to the upside forever, but it's pretty unabating, and again looks a bit exhaustive to me.
Strong resistance level where it is right now too.
Yeah. Around this area. Yeah, you'd think so. Certainly, you would think so. Right. Anyway, yes, I better go, mate. I better go.
All right, mate. Have a good one. I'll catch up with you on Monday, of course. And look, I might even have a bit of spare time on Sunday to catch up with some journals.
Awesome, mate. All right, that'd be amazing.
I'll do my best.
All right, let me know. Thanks, guys. I'll see you all next week. Have a good one, Jeff.
You too, mate. Happy days.
See you, buddy.
Okay, I'm going to zip through a few things, guys. First of them was to add to what Ashley just said. I'm going to answer your question, Lewis, on WTI. I'm actually on XTI, but everything happens at these trend lines and trade lines, in my humble opinion, and there's a beautiful confluence running through here. So this is the point where you want to look for a trade. Now, whether it's back to here and go long, and you've got to have that level in mind, or whether it's a false break, come back to here, come back to that level, either one's acceptable to me. I'm on a monthly chart there, right? So that shows you how strong this move is. Weekly, you've got to find your own levels there, but same, you know, if you can find a trade line here, which is that one, not this one, let's get rid of it. You've got to come back to here before you, I say I would have to come back to here before I look to trade it. So yes, I think it's time for a breather. Can I trade it? Don't believe so. Let's go on with my watch list for the week, which has kind of done weird things, but some have been very, very nice. Swissy yen was on top of my list, which is the first one I was looking for. And we were looking to trade this short, but after a pullback, no pullback, went short, found the bottom of the range, and that range is pretty clear in there, right? Let's put that in just in case you can't see it. That range is pretty clear. So I'd be looking now for this to go to the top of that range, maybe sneak out, hit the weekly pivot, get back underneath, retest, and look to trade it back inside that range. That would be Swissy yen. That was number one. I was looking for a pullback to the weekly pivot and then go short. We're halfway there. I'll still look for that tomorrow. Euro Swissy was another one, and we were looking to trade that short. This could have been the worst possible call of the week. Where is Euro Swissy? I'm on the wrong chart here. Euro Swissy. There it is. So I was looking for a short here, but what I did point out was one of two things were going to happen here. And we had an ascending triangle. Now, most people will tell you that they've got a tendency to break to the upside. And of course, they would be proven absolutely 100% spot on. The way I would like to play these things, that's the weekly chart I'm looking at. And the way I do like to play these things is let the break happen, come back and test the trade line and then go long, or come back underneath the trade line and then go short. Nothing of the sort. That's as good a spurt or a skyrocket as you're going to see on Euro Swissy. You want to trade against that? No, not for me. So we'll leave that one alone. Pound Aussie was the next. We were looking to trade this short on the back of a big bearish engulfing bar. What was that on the weekly chart? No. Daily chart. On the back of that bar there, we were looking to trade this short. Again, after a test of the weekly pivot. That's exactly what happened. But how do you get in there? That's the disappointment of the week for me, Pound Aussie. And like I said to Ash before, it's not the ones that we got, it's the ones that we didn't get. And this is one of them, Pound Aussie. Now too far gone for me. Phase one, phase two, but we've got to have another retracement before I look to get to trade that. So that's probably gone for the week as well. The last one on my watch list from Sunday was dollar Swissy. And we were looking for we were looking to trade this inverted head and shoulders, right? The only thing that I was looking for a dollar bull trade was this one, because it was very clear that we had a left shoulder, a head, and a right shoulder, massive neckline, absolutely clear as crystal, broke to the upside, found resistance, came back to that exact level, and then gave us this off the monthly pivot. If I were to trade white bars long, then that would have been the one for me on the daily chart. I don't, so I didn't. And since then, I've really had no way to get in, sadly. And again, that's another one that's got away, because the bias was absolutely rocket solid, given that chart pattern. And the chart pattern, if you haven't locked that in your brain cell, that's as good as it gets, frankly. Left shoulder, head, right shoulder, massive neckline, solid as a rock, broken, retested, away you go. Not in. Maybe I have to learn how to do limit entry orders, and although I wouldn't have reached the monthly pivot, so it wouldn't have worked. Then we added Euro Yen. Euro Yen, again, we were looking to trade short. This is not one that got away, obviously, guys. This is one that looked really, really good to me early in the piece, but that's gone long, not short. I like that bearish engulfing bar. I like these lower highs. little tweezer top there, out of context, because a top is not a top unless it's above the previous, right? But I did place an order on this short under here. Didn't work. Obviously, we didn't get triggered in, but completely the wrong direction on that. I was looking for a stronger yen this week. Didn't happen. We added, Euro Swiss, it's the same. Dollar yen, we added an order on dollar yen. Again, looking for a short based on this bar here. So we traded underneath this bar here, didn't get triggered in. Haven't lost that bias, I've got to say. That's the daily chart. We're now at a resistance level. If I see a pullback under here, daily pivot, weekly pivot, and then a retest of same, it's not going to happen on a daily chart because we're running out of time, day and month. But maybe on a 4-hour chart, if that were to be the case, so price down to here, maybe retest the daily pivot, give us a lower high, I'll be into that again. So I'll put that in the Telegram group, those of you who are in that, most definitely. If that's the case, I will be still looking for trade dollar yen short. And today, which was the last of them for the week, we bought Aussie Kiwi. Again, this is the second time we bought Aussie Kiwi. We're free trading the first trade, which was entered here. Second trade was entered about here somewhere. That's not looking so hot at the moment, but I'm still fairly confident that, and I'll go through the process again with you. I do believe that the Kiwi has rallied on the back of what happened on Tuesday, which was the RBNZ statement. That's completely erased this move up, which of course is the most recent move inside 2021. That started early January or late January, actually. We put in a double top. That was driven down by the news on the Kiwi, and I think this is a fantastic place to trade this long. It may not work out, but we'll pick it up again if it comes shorter. And the reason I like that so much is pretty much because we're trading in a range here, have been for quite some time. And our most recent trip to the extremes of that range has been to the bottom, and we have put in a higher low based on that bottom. Might be a little bit early here. If we are, then I'll pick it up again. But I see this as a potential rally to the top here around about the 113 mark. So that's a fair reward if we actually get in there. Let's check on the pound trade. No trigger yet. We haven't been triggered long nor short. So that's pretty much the way I see it, folks, at this point in time. There's nothing for me to do at the moment. We've got a very static market on pound US dollar. We'll have a look at euro US dollar. Oh, and euro CAD. Did I mention euro CAD? I think I might have. We missed TP1 here by 5 pips. I'm pretty confident we're going to get it, right? So I'm not the least bit concerned. They're the parameters there where we've gone, what? Where are we? 52.46 at the moment. So we're 140, 150 pips to the good, but we took a fair risk on this, about 400 and something pips as well. So we need to get that TP1 to get us safe in the market. And then if that comes, then this is the bigger picture thing, right? I think there's, a lot of reward available here for our entry, which was there about 1,000 pips, something like that. Then if we got really lucky, it'd turn into 3,000 pips, and that's why we're happy to take that 500 pip risk. So I can't really give you anything more than that at this point in time. Euro dollar's just gone completely nuts, and the pound has not. That is interesting to me. The Aussie has as well. The Kiwi has as well. So that means to me, pound is weaker than the other majors. Can you take advantage of that? Maybe something to look at throughout the evening and maybe into US session. Have a wonderful weekend, folks. That's all we've got for this week, and we hope you've enjoyed our company. I really enjoyed Tuesday. I thought the session with Shukri and Simon was really informative, and thoroughly enjoyed that. We've got a little bit of money to put in the bank, and hopefully that turns into something a little bit more substantial before the week is out. Have a great weekend, everyone.